Hello, welcome back to the channel. We feel overwhelmed by seeing so many investment options in front of us. With thousands of stocks and ETFs to choose from, it's very easy to make mistakes. And we all have done the mistakes, like choosing the wrong fund, choosing a lot of funds, and whatnot. But what if I told you that we could achieve the long term wealth with just one ETF? Yes, just one. Today, I'll show you why a one ETF portfolio is not only simple but powerful too. Many beginner investors, including me, make the mistakes of overcomplicating our portfolios. We all chase the latest hot stocks, jump in, and try to time the market. And guess what? Most investments end up underperforming. But there is a smarter way, a portfolio with just one well chosen ETF, which can save us from decision fatigue, protect us from costly rookie mistakes, as well as give the exposure to thousands of companies in a single move. The one ETF doesn't just simplify our life but also gives us access to the broad market portfolio, meaning we are automatically diversified across sectors, industries, and geographies without doing much hassle. Not all ETFs are same, but for one ETF portfolio to work, it needs to check few important boxes. Like number 1 is the total return potential. We want an ETF that has historically delivered strong returns over the long term. Number 2, risk. Low to moderate risk is crucial. This is our core portfolio, not a gamble. Number 3, volatility. Consistency matters. We have to look for ETFs that hold steady even in the turbulent markets. Number 4, diversification. The more diversified, the better. Your ETF should cover a wide range of sectors or even countries. One category of ETFs that stands out in all these areas is the broad market ETFs. These are funds that gives us access to the entire stock markets, be it US, global markets, or even specific segments of the economy. So now you might be wondering which specific ETF checks all these boxes. To narrow it down, I have analyzed three of the most powerful broad market ETFs listed in the US market. Number one is the VTI, Vanguard Total Stock Market ETF. This ETF covers the entire US stock market, from large cap giants like Apple and Google to small cap growth stocks. Number 2 is VOO, Vanguard S&P 500 ETF, a classic favorite. This ETF focuses on the top 500 companies in the US. Think Apple, Tesla and Microsoft. Number 3, VT, Vanguard Total World Stock ETF. Why stop at the US when you can own the entire world? This ETF offers exposures to thousands of companies globally. Each of these ETFs has its strength, but which one is the best for your one ETF portfolio? Let's compare them across key factors like return potential, risk, diversification, and by the end, you will have your answer. Let's start with the total return potential. VO and VTI have delivered impressive returns because they focus only on the US stock market. Now, if we compare all these three, VO has given 12% annual returns over the past decade. VTI, on the other hand, has given little better returns than VO because it includes the mid and small cap funds which delivered higher growth during the bull markets. Whereas on the other hand, VT offers the most diversification between these two, but if we compare it with the total return potential, it has lagged behind VTI and VO because of the international markets. So if our goal is to maximize the returns, then VTI and VO take the lead. Next is about the risk. Investing isn't about how much you can make. It's also about how much risk we can take. So let's break it down. VO, since it focuses on large and stable companies, VO is the least volatile of the three. Whereas VTI, it includes the smaller companies, which adds more volatility, but it also increases the growth potential. And then the VT, that is the global market. VT's global exposure introduces additional risk factors like currency fluctuation and political instability in international markets. However, this broader diversification can also protect you from the downtrend in any single region. So, VO wins for stability, while VTI offers the mix of growth and risk, and VT, on the other hand, is better for those seeking maximum diversification. even at the cost of slightly higher volatility. Next is the diversification. VO covers the top 500 companies in the US. It's a fantastic choice if you believe in the long term growth of the US economy. VTI has over 4,000 companies. It's a step up in diversification, giving you exposure to large, mid, and small cap stocks alongside the mega cap players. And it is still focused on the US market only. Whereas VT takes the diversification to the next level. It has over 9,000 companies in every corner of the globe. If you want to invest in the entire world economy, VT is your best option. So here's a trade-off. VO and VTI offer strong US focused growth, whereas VT provides unmatched global coverage. Which one fits your goal depends on whether you want to bet on the US or you want to bet on the global. Now that we have broken down the risk, returns, and diversification, you are probably wondering which ETF is the ultimate winner for a one ETF portfolio. Stick around because in the final section, I will reveal my overall ranking and explain why one of these ETFs stands out for the long term investors. One of the most underrated benefits of a one ETF portfolio is simplicity. With just one ETF, we can avoid the hassle of constant rebalancing, tracking multiple investments, or second guessing our choices. When it comes to long term investing, simplicity isn't just convenient, it reduces the chance of making rookie mistakes like overtrading or losing track of your allocations. Let's not forget about the expense ratios. Expense ratios is the small annual fee which we pay to own an ETF. Over decades, even a small, tiny difference can add up to a significant amount. So, VO has an expense ratio of 0.03. VTI has 0.03% as well, whereas VT has 0.07%. While VT is slightly more expensive due to its global holdings, all three are incredibly affordable compared to actively managed funds. If cost is a deciding factor, VO and VTI lead the pack. Now, for the moment you have been waiting for, the final ranking. VTI. If you want a well diversified, cost efficient portfolio with excellent growth potential, VTI is the clear winner. It's the perfect set it and forget it option for most investors. Next, VOO. A solid choice if you want stability and focus on large cap US companies. Great for conservative investors who prefer a safer side. Number 3, VT. Ideal for those who value global diversification and don't mind sacrificing some returns for broader exposure. In my case, I invest in VOO because I want to focus only on the large cap US companies. And being a conservative investor, it suits me. Remember, there is no one size fits for all solution. Your choice should align with your goals, risk tolerance, and investment horizon. Now that you have seen the breakdown, which ETF do you think fits your portfolio? Let me know in the comments. And don't forget to like and subscribe for more practical investing insights. Your journey to financial freedom starts with a single decision. Make it a smarter one.